This is the biggest market turnaround of the entire Iran war, and it happened in a single afternoon. According to Yahoo Finance and CNBC, on Tuesday, March 31st, oil prices plunged and stocks surged. After Iranian President President Pezeshkian told EU Council President Antonio Costa that Iran has, quote, the necessary will to end this war, but expects certain guarantees in exchange. This was the very first signal from Iranian leadership showing openness to negotiations since the war began on February 28th. Markets exploded on the news. According to CNBC, the Dow Jones Industrial Average surged 1,125 points, or 2.49%, closing at 46,341. The S&P 500 gained 2.91%, ending at 6,528, and the Nasdaq Composite jumped 3.83% to close at 21,590. According to CNBC, all three indexes posted their best single day since May. Meanwhile, according to Bloomberg, oil declined sharply as both Iran and the U.S. signaled openness toward a resolution, sanding away the long-standing war risk premium baked into oil prices. According to Yahoo Finance, Brent crude fell more than 2.9% to trade at $104 per barrel, while U.S. benchmark West Texas Intermediate shed 2% to trade near $101 per barrel. Now here is the critical context that makes this even bigger. According to the Washington Times and CNBC, before this breakthrough, markets had been suffering through their worst stretch in years. The S&P 500 had just posted its worst quarterly performance since 2022, down nearly 4.6%. The Nasdaq had fallen more than 10% below its all-time high, officially entering correction territory. The 10-year Treasury yield had surged from 3.97% before the war to as high as 4.43%, pushing up mortgage rates and loan costs for millions of American households. According to AAA data reported by CNBC, national gas prices had soared more than 30% since the war began, hitting $4.02 per gallon, the highest since August 2022, when Russia invaded Ukraine. Diesel hit $5.45 per gallon, devastating freight and delivery costs across the entire economy. According to Trump, quoted by the New York Post on Tuesday, the war, quote, won't last much longer, and the Strait of Hormuz will open, quote, automatically after a U.S. withdrawal. However, caution is still warranted. According to CNBC, Treasury Secretary Scott Bessent told Fox News the U.S. is, quote, going to retake control of the straits, signaling the U.S. has not fully committed to withdrawal. Analysts have warned throughout this conflict that markets have repeatedly rallied on Trump's statements only to sell off again when Iran denied talks were progressing. According to the Washington Times, as long as the Strait of Hormuz remains closed, analysts expect oil and markets to continue experiencing heightened volatility. So what does this mean practically? According to Fortune, analysts have noted that the U.S. stock market has a history of bouncing back quickly from Middle East military conflicts, as long as oil prices do not stay elevated for too long. The key number to watch is oil. If Brent crude breaks decisively below $100 per barrel and holds, it signals the market believes the war risk premium is genuinely unwinding. That would be the green light for a sustained rally. For now, this is a historic day. Iran spoke directly about ending the war for the first time. Watch the Strait of Hormuz. Watch oil. That is where this story ends or escalates.